Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on euro currency. So today, guys, I think that we have actually a mixed result for this week. This Friday already, so hardly we will do something today, but in general, by the result of the week, I am a bit frustrated, just because we were correct on the direction most times, but the entry process was really difficult this week. So every time some external intruding factor come and actually change the normal technical behavior of the market, triggering either upward direction too fast and too early. So, nevertheless, you could see that the targets that we have specified recently has been completed. So it's difficult to say what result you have got this week. So, and this is one of the such weeks when you are actually see by the end of the week that your target is done. So here, as we suggested, market should take out of this top, even to show some wash and rinse. We said it might be 1578, maybe 116, but no upward continuation to the next target. And indeed, that has happened. So you can see 116 has been tested. Market now is dropping below the low. So stops have been grabbed here, and it seems that there were a really big amount here just because the market has moved higher for 50-60 pips, so it's significant upward action. It was purely triggered by the closing buying orders that stands above the stop, or standing above the stop. So what are we going to do currently? At this point, market once again hits the monthly overbought area. Last time when this has happened was right here. You can see what reaction has followed down to the daily oversold. This is absolutely normal performance. Here, once again, daily oversold stands around 113. So I wouldn't say that definitely should be down back to this area, but usually response on the market overbought, monthly overbought, is more or less significant and extended on the lower time frames. From that standpoint of view, I wouldn't surprise if within the 1-2 weeks we could get a bit deeper retracement, some downside reaction. So definitely at this point, I do not want to buy and take the new long positions. Besides, with this escalation between the Israel and Iran, you could see what is going on, particularly on a dollar index. It's rebound here to the upside. Demand for the dollar increased. This is just, and now Iran is not responded yet. So it's yet to respond. What the response will be, how strong it will be, maybe like last time it will be maybe stronger, we will see. But this escalation increases demand for the safe haven, despite the all turmoil that stands around dollar, United States. For now, traders still treat the dollar, maybe the Swiss franc as well, as a safe haven asset. You could see rising of the dollar and simultaneously dropping of the yields is a clear indicator of the rising geopolitical tensions. Gold rising as well, but we will cover this in a separate video today. So from that standpoint of view, overall background, at least for now, is not really friendly for considering taking new longs in the euro in the short term. So it means that probably better to wait. On the 4 time frame chart, by looking at our completed OP and the target that market theoretically could reach, it seems that these two levels might be reached relatively easy. I don't want to say that will be today, but in general, as a retracement, appearing on some kind of the ABC pattern or something like this, 1470, confluence here around 114 even. This is one of the two levels that, well, have big chances to be touched, especially with this ABCD completion. 30% retracement is absolutely normal reaction when the market completes the ABCD pattern. So from that standpoint of view, 114 quite easy could be reached with this downward retracement. On the hourly chart, I do not see currently suitable patterns for trading. So in fact, once market has washed out the previous top, we've got the great a double repo sell pattern. We have thrusting upward action, and that's perfect performance of the double repo sell. But mostly it's already completed. So minimum target of the double repo is the 50% of the whole thrusting action, and mostly it is done. So now on intraday charts, those of you who would like to take the scalp short position, you have to wait for something, the bigger pattern, the pattern of the larger scale. So market has to increase the scale and form something that will trigger possibly deeper downside action. Those who trade on the high time frames, this is nothing to do, because on all time frames, starting from the monthly down to the daily, we have bullish trend. So we do not have actually reasons to go short here. We do not have any directional bearish patterns. We do not have any bearish signs. So from that standpoint of view, we need to wait for retracement and see how market will respond on particular support levels that we have on a fall time frame chart, trying to find the one where market will try to turn up again. That and towards what we have on euro currency. So let's see what will happen next.